Do you feel like you're paying too much in taxes every year or have a relationship with your current CPA where you only meet them once or just before tax time? Look, I want you to know that there is another solution to paying less in taxes and keeping more of your money. Valard Advisors is a leading fractional CFO and CPA firm that specializes in advanced tax strategies for founders, athletes, and entrepreneurs. Valard Advisors can help you navigate the complexity of business taxes and ensure that you're paying the least amount in tax possible. But this is far more than tax preparation. This is strategy. This is really getting into the data-driven decisions that your business needs to make in order to develop a long-term strategy that aligns for your business and personal goals. Whether you're looking to minimize tax liability, maximize your deductions, or plan for your financial future, Valard Advisors has the expertise and experience to help you get there. Do not wait until tax season. Work with professionals today. Contact Valard Advisors to schedule a consultation. As I said, business growth is increasing top-line revenues at any and all cost. Scaling is increasing those revenues while minimizing or maintaining your costs, which will improve your bottom line or the profit margin, sometimes both. Welcome to Generation Wealth. I'm Candy Valentino, and I've been building businesses and generating wealth before I could legally order a drink. For more than 2 decades, I've built, scaled, acquired, and exited businesses, all while investing in real estate and building financial freedom. Now I want to help you expand your wealth and give you the proven roadmap to implement today. It doesn't matter if you're a part of Generation X, Generation Y, or Gen Z. It is time to join Generation Wealth. Now let's get started. Hey guys, welcome back to another episode of Generation Wealth, your podcast for all things building wealth, businesses, real estate. We're breaking it down, and this is no exception. Today, I want to talk about business specifically, growth in scale, what the difference is, because I have noticed so many business experts, gurus, and I'm using quotes if you're listening to this, talk about scaling a business, growing a business, number one, as if it's the easiest and most natural thing in the world to do. And number two, with no reference point of how to do it, because there are so many people that talk about business that have never actually built one, or they're in their first iteration. I just saw the other day online somebody talking about investing, and it was somebody that I just helped figure out how to start investing, and all they have is their home, which isn't even really an asset. So I wanted to break down just some of the BS that we hear and really to tell you how to do both, because it is so critically important when it comes to your business. Now, let's break down what they are first. Business growth, all that is increasing your top line revenue. And it's doing it really at any cost, where scaling, on the other hand, is totally different. It is increasing revenues while minimizing your costs, which effectively improve your bottom line and your profit margin. So the biggest difference is that relationship between your resources and your revenue. And while growth typically involves investing massive amounts of capital and resources to drive revenue, scaling, on the other hand, involves finding ways to increase that revenue while minimizing or maintaining cost. The nuances between growth and scale are typically not top of mind until an entrepreneur experiences it as a pain point, as growing pains, as a challenge. So let's break down what these are and how they might apply to your business. So as I said, business growth is increasing top line revenues at any and all cost. Scaling is increasing those revenues while minimizing or maintaining your costs, which will improve your bottom line or the profit margin, sometimes both. Economists refer to the latter phenomenon as the economics of scale. So let's break this down as to how it applies specifically. If you make something for, say, you have a product, you make it for $70, you sell it for $100, or you make it for $20, you sell it for $50. And both parts of that equation are inflexible, meaning that you can't make it for less and you can't sell it for more because of the market. Well, your business will be able to grow. You can grow your revenue, but it won't be able to scale because your costs are increasing at the same rate as your revenue and profits. Now, on the other hand, if you can reduce those costs and they're more flexible, maybe by getting a volume discount from your supplier or switching vendors and choosing a different manufacturer, you may be able to scale your business and earn higher profits. And look, this is a very simple way to look at it. There are many factors that contribute to the cost and price of a product and your ability to serve more customers. So let's break into this a little bit deeper. Business growth. Now, nearly every business owner wants to see their revenues grow because on the surface or not, growth will indicate that you have built a successful company. At least that's what you want people to think, right? But growth for the sake of growth is really for rookies. It may not be a sustainable business model. And if the only way for you to make more money is to sell and deliver more of your product or service, eventually your business is going to hit a break point or a tipping point. You will max out the amount that you can make, and you will max out the sustainability of that business in that specific business model. So what will happen is then you have a choice to make. You can either remain a small business, work crazy hours, and maybe sacrifice mental health or profits or quality. You can adjust your pricing model, or you can consider hiring more people and investing some more resources so that you can continue to add revenue and grow. But adding resources, adding more people is just going to make your costs go up and your profits go down. And even if it's just temporarily, until you ramp up those sales and start adding more revenue to cover those costs, you may actually decrease in profit and in your bottom line. Now, sometimes business owners, entrepreneurs, founders, their only motivation to achieve a certain level of income is so that they and their employees can live a comfortable life. And this is acceptable if you're comfortable repeating this cycle of adding resources at the pace of your growth. Like, for example, there's some businesses that this is the only way that they can really grow is, let's say you are an accountant or an attorney, any type of professional service where your primary source of revenue comes from selling labor. As an example, if they don't find a way to scale their growth, the only way that they can take on more clients is to hire more people. And so this cycle continues. Now, most entrepreneurs have bigger visions, bigger dreams. They want to build a business that will grow in value and then eventually have an exit to either cash out, retire, or pursue some other goal. But entrepreneurs must remember this. They have to know growth versus scale and to be able to adopt growth strategies that will result in a successfully scaled business. This not only improves your ability to earn profit today, but it also gives you the ability to command a better selling price when you're ready to exit. The difference between growth and scale, not only will you feel it now inside of your business, but you'll also feel it when you're at the end of your business and you're looking to get multiples on EBITDA. So let's take a look at the other side of this equation. What is scaling and what does it mean to your business? Well, scaling a business or a company means that you're growing your revenue and increasing your profit margins at the same time. And the only way that you can do that is to be more efficient. By being more efficient, it allows you to continue to add customers and deliver the same level of service without increasing your costs. SaaS companies, for example, have the most clear-cut version of this. They have significant upfront investment as they build the solution, but then once they launch, they can serve a universe of customers. Now, this is, of course, presuming that there is a real need for what they offer and the solution delivers what it promises, but the potential upside, the return on EBITDA can be impressive at an exit. But let's just be real. Scaling a business is not easy. That's why most people that you encounter, especially in the online space, what they're doing is growing a business. They don't even know the difference between growth and scale, let alone have success in scaling and exiting companies, because the methods to do so will always vary from company and industry. And there's always going to be ups and downs. But if you know what you're doing, this is the growth curve. This is the ability for you to really set up a successful, sustainable business. And so let's break down how to actually scale your business growth. Earlier, we talked about how you can maybe negotiate with a supplier or get a different vendor, but there are so many other things that you could do as well. Number one, you could reduce the cost of products or services. In addition to looking and seeing how you can maybe reduce the cost of materials, are there ways that you can outsource labor or find cheaper sources? Can you negotiate vendors and shippers or find ways to reduce your rent, your overhead, or even equipment? Number two, invest in the value of your product or service. On the total flip side of reducing costs, you can invest in making your product better. Perhaps this is more features, more capabilities, increasing the level of service, having better trained employees. All of these improvements would give you greater value in the market, which will allow you to charge more and ultimately translate to boosting your bottom line. Number three, all roads lead through people and processes. How can you create efficient internal processes and procedures for your people? Look, nearly every single area of business can benefit from establishing repeatable, predictable processes and procedures. I'm going to repeat that again. Nearly every single part of your business can benefit from establishing repeatable, predictable processes and procedures. So for example, it doesn't matter if it's finance and accounting or shipping and fulfillment. Having something that is automatic, something that minimizes decisions or discretion of your employees will end up saving you time, money, resources down the road. Number four, invest in productivity technologies. Look, the right tools can significantly improve your productivity and your employees' productivities. For example, with the right technology, you might be able to track customers throughout their life cycle, maybe track your marketing and sales efforts to make them more efficient and effective. Improving your customer service will also improve your reputation and repeat customers and ultimately increase your lifetime value. So this is another great area that you can invest in technology in order to help facilitate processes better in your business. And number five, hire for specialization. Look, hiring a full-time employee and expecting them to be a jack of all trades is always something that typically startups will do in the beginning, but it doesn't make it cost effective. Doing this can actually lead to costly errors, burnout, and it might take someone a lot longer to do something if they're generalizing in something as opposed to being a specialist in a specific field. And look, you may be in a position where you either don't have the need for a full-time employee that specializes in something, or maybe you can't quite afford it yet, but you can outsource to all different types of platforms like Fiverr and Upwork and finding employees out of the US in order to minimize expenses. When entrepreneurs are serious about growth versus scale, they will really start to dive in with their finance team to get a budget, to get detailed cash flow reports, to do financial forecasting. And no matter where you are in your business, this is something you should be starting now. Understanding revenue, profit margin, all of the KPIs and business metrics that your business truly needs to function better, to grow and to scale is always a smart investment sooner than later. So which really is better? Should you be growing right now or should you be scaling? I see so many founders and entrepreneurs get tripped up because they'll hear me talk about something and all of a sudden scale sounds sexy because it's different. But it's not necessarily which is more desirable. It's which one is best depending on your long-term business goals. If you started a company because you want to love what you do and enjoy the people that you work with and just make a decent living and not have to punch a clock and be able to travel and do whatever you want, then growth without scale is totally fine. There's nothing wrong with being self-employed. There's nothing wrong with being a solopreneur, but just know that there are risks to having a business like that and creating a business that doesn't scale. If you pass away, if you lose a big customer, if there's a change in your industry or your market, your entire company could be at risk. But again, that could be okay for the lifestyle that you want. Always just know, what life do you want to build? What are your long-term goals? And then reverse engineer your business to fit within that plan. If you want to build a thriving business, a huge company that's going to provide value to the customers, that you're going to employ a bunch of people and create a big team, and you want something that lives beyond you, something that you can exit, well, then you need to start looking at the economy of scale. Scaling a business is going to create depth within the organization. It is going to create sustainability in a cost-effective manner, and it will give it the ability to weather the inevitable ups and downs in your industry, as well as deliver a return to whoever comes along and purchase that, or if another company acquires it or merges with it later. Okay, guys, as I always say, don't listen to one of these things and just start applying it. Make sure that you reverse engineer what it is that you want for your life and for your business, and how understanding growth versus scale and which to use when will get you there more quickly. All right, that is all for today. Thanks so much for tuning in to this episode of Generation Wealth. We'll see you next time. And don't forget that if you didn't buy a copy yet of Wealth Habits, it is now available on Audible. And thank you so much for all of your support. because we are #1 bestseller, new release in multiple categories. And of course, if you already have a copy of the book and downloaded it and listened to the book, please consider leaving a 5-star review over on Amazon. It would mean the world to me, as well as many other readers that need this information. Okay, guys, that's it for today. We'll see you next time on Generation Wealth.